Well, I was speaking about the rupee before we went into the break, so let me just read the rupee call that came in the morning. I want to read it because we warned you, and this advice or call on the rupee came from a very prominent treasurer, Prasanna of ICICI Bank, told us this morning the moderation in monthly trade deficit to below $10 billion, benign inflationary environment, resumption of FII inflows and perceived reduction in political and geopolitical risk premium has perfectly set the stage for rupee appreciation. Further, RBI announcement to sterilize dollar liquidity through buy-sell swap route at month-end implicitly means tolerance for near-term rupee appreciation as direct spot intervention minimizes. They expect the rupee to maintain its appreciation bias towards the year-end, by which they mean financial year-end, and see a range of 68.70 to 69.40 during the week. It looks like 68.70 is going to be achieved today itself. We can reach Prasanna back for a new range. But I mean, this is a very strong uptrend in the currency.
Okay, big appreciation is what you're seeing in the currency. But what about in the commodities? Manisha Gupta joins in now to give us a quick roundup of the commodity action. Hi, Manisha, what's buzzing there?
Thank you, Sonia. You know, the currencies are playing a big role in commodities as an asset class as well, with the dollar index up nearly a percentage point in the previous week. We have seen that actually continue to put some pressure on many of those commodities and currencies as well. So if you look at the euro, which is gained by a percentage point, pound sterling trading at a 9-month highs, and most of the Asian currencies as well are doing quite positive today. So the crude oil prices, which have seen a decline in the international markets, have seen more decline in the Indian markets because of the rupee appreciation and the rupee calculation. So while we are 0.25% down in the global space, we are nearly 0.5% down for the Indian markets. Also, what is bothering the crude oil prices is the global economic growth slowdown. There were earlier reports that you might see crude demand at 2 million barrels per day for 2019. The latest revised reports suggest 1.3 million barrels per day of a growth. And there are some who suggest that with the kind of weak data that we have seen from China, from Europe, and now from US as well in sense of production data, factory orders, etc., there are demand concerns now building up into the space. The only thing that has been supporting the crude prices is the OPEC and the allies output cut, which they now say could be extended for the second half of 2019 as well. And we've already seen $68 plus kind of levels in the previous week, just a couple of dollars away from 70. So that really seems to be the range building up for Brent now, 65 to 70, at least for the first half of 2019. But with the decline in US dollar, we did see some gains come in for the gold and silver prices. At least that was the way we saw Friday. But today, with most of the global equity markets doing well, there is some pressure that has come in back here. Also, these markets will watch out for the US Fed two-day meeting that starts tomorrow. So ahead of that, there is some profit-taking come back in case of gold and silver as well. The base metal prices have continued to be under pressure too. The only thing that works in positive for this space is there are some statements that the US and China are now making concrete progress. So that really has been supportive. But if you look at the US dollar, that continues to weigh on. The kind of weak data that we have seen also continues to weigh on to the base metal prices. So it is a mixed trend that you are seeing in the initial trades in case of the metal space. Trading strategies then, and we have them from Anand Rathi. In case of gold, they have a sell. 31,600 is the target that they're watching out for. But it is a buy in case of crude, 4,080 as a target. Sell continues for the metal space. For copper, they're expecting a downside trade of 442 for the day.
Thank you very much for that, Manisha. And we see the first red tick in the equity space as well. The mid-caps just about mildly in the red, 4 points lower. The index, okay, now 6 points lower on the index, not much. But there is a general taking, profit booking across the board. Yes. I mean, we have seen about a 20 basis point fall in the Nifty and Sensex as well. And the Nifty Bank, which was at one point trading 1.5% higher, is now trading 1.1% higher.
Okay, well, on that note, let's take a short break. On the other side of the break, we'll chat about one sector, the real estate space. The first REIT or real estate investment trust opens today. So we have esteemed panel of experts joining us. Ashish Shankar of Motilal Oswal Wealth Management, Ramesh Nair of JLL India, Sunil Rohakale of the ASK Group, and our very own CNBC TV18's real estate editor, Manisha Natarajan. You would not want to miss this one.